so I'm just gonna review another turning point, and that's about it. So what we see here is the YM. The above chart is the daily chart. Underneath that is the 50-tick brick Renko, and on the right hand side is the 10-tick brick Renko. It's just like similar to time frames if you use brick sizes. All right. So what is the first thing you notice? The trend is up on the daily. Basically, it's in markup and it's coming from spring. All right, and how do you know this is a good spring, by the way? That's important to understand, because just because it dips on the support, like, you don't really know if that's going to spring up, right? So one of the things that you'll see is many markets, when they go into a spring position, they have the breakout bar in the opposite direction, meaning when a market is supposed to break a low, it's supposed to break out. Let's just say you have that thought that, hey, it's this low here, if it's going to break down, what should happen? There should be a big bar down breaking the pivot, breaking support, right? Similarly, in any breakout, what you would have is, let's say over here, you have a breakout. You see that this bar expanded in range and somewhat in volume as well. So this is common of breakouts. What do? They expand in range. Even the minor ones, like over here, you see pop, expanded in range. Here, expanded in range. Here, expanded in range. It's just always happens. Why is this expression of strength, price strength? Okay, so right here, pop, expanded in range. You know, and tested the breakout, ding, ding, ding. So over here, I mean, what do you think is going to happen? Take a wild guess. So you see that breakouts have this tendency right here. For example, what happened? Expanded in range. Here, what happened? Expanded in range. Here, what happened? Expanded in range. And also here, what happened? Expanded in range. And typically they also expand in volume as well. Price and volume tends to increase. So right about here, like if it's going to break out, you'll see the expansion range. All right, that's just the nature or the characteristic of breakouts. Now, whether it work or not, it all depends on trend and volume and supply and all that, but I don't want to go there. The point that I'm trying to make is that when they break out, they expand in range. But what about springs and upthrusts? This market is in a spring position, and the range of this bar is bigger than the range of the prior bar in the opposite direction. It's almost like it's a quote-unquote reverse breakout. So this is what I'm trying to point out here. When markets are in spring positions and the breakdown that you're expecting, if you're short, with big range to the downside, instead occurs with big range to the upside, chances are that spring is a spring. Because that's what had. And I'm not saying that that's always the case, but I mean, it's clear here. This is spring. Why is it spring? No follow through. And the reversal is aggressive. It's like a breakout bar. It's like a breakout bar. Okay? At support, boom, like a breakout bar in terms of range. So this is one key characteristics of springs and upthrusts. I don't know where I can find an example of it, but you'll see that this is a situation. So if you want to look at springs and upthrusts, what you want to do is mark these levels, see what happens at these levels, and if the reversal is hard, big, strong bar. That would help the case of a spring or upthrust. Anyway, where was I? So that's a side lesson, but what I want to do now is I want to review a turning point. All right, so we'll just pick a turning point, and you'll see how the character of the turning point, to understand the nature of turning points, just like all these market behaviors, they have characteristics. And you gotta know what those characteristics are. So here, for example, you had a breakout, fairly evident, right? And you had a test of the breakout. So we're going to watch this area right here. First thing we notice is that the market, when it breaks out and tests the breakout, it does not go halfway back. It does not go all the way down. So chances are you want to leave it, all right, because it's just not enough of a pullback, not for me. At the same time, when it reverses, look at the volume that comes in. Look at this volume. Look at this pressure. This is very significant, right? It tests the higher high relative to the prior two highs, tests, and look at the volume, that pressure that comes from that area. That is very aggressive. So, I mean, it's 68 over here. It's pretty. So what we want to do is just examine that and see what's going on. So the market made a top right over here, right? And now it starts pulling back. So that's the initial pullback. And that itself is a turning point, like that pivot right there. So, I mean, it exposes itself, as they almost all do, in either price and or volume. So what you see here is a big selling wave followed by a low low. And when it's followed by a low low, it breaks structure or breaks trend. And then it tests and dips, okay, to that area. As it goes to that area, what happens? You have heavy selling, but it turns out that that was actually a minor climax. Do you know that ahead of time? You don't. I mean, I wouldn't know it because for me, it's just way too early for it to end, because I'd be expecting a move about halfway back, at least to this area right here. But it doesn't do that. Why? Because of strength. So you just don't know. And instead it gets picked up here, 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 and you don't know because it's just not that clear. And that is the situation. I mean, so why is this volume so heavy? It's heavy because as the market grinds back up from this pressure, from this selling, right, into this area, this sideways action is why this volume is so heavy. What is this sideways action? This sideways action is accumulation. You could call it cause, you could call it whatever. But I mean, it's like, you could call it accumulation, but at the same time it could also be interpreted as absorption against this area. So, just saying. This sideways action, because it's at a resistance point, typically accumulation, it would stay at the lows. But it bots up and then it goes sideways. So it's more like the absorption. If you just looked at it though, you might think it's, some folks will look at it and say this is, what is it? So a distribution or redistribution or whatever, right? So that may also occur to some, individuals. Well, all we know is that it's going sideways and it's hugging resistance. When it's hugging resistance, going sideways, not pulling back, even though there's pressure, and then finally pressure lifts, what do you know? You know that this is absorbing. And then finally, it breaks out right over here, rallies on heavy price and volume action, and that's exactly the point where it presses and continues to trend. Okay, so I'm done with examining this trend. So in this trend, or this turning point, this was unlike other turning points in that the climaxes aren't that clear. Yes, the climax is there. Yes, it's biggest volume in about 15 waves. Yes, all of that. But typically, we would expect a number of waves down and that to occur. So the print is there, meaning the volume print is there, but the interpretation of that print is it really heavy selling, or is it, are they buying the other side to accumulate, right? Like, it's only in hindsight that you know that this heavy volume is actually accumulation, because climaxes are accumulation. Selling climaxes are accumulation, where one side is panicking and other side is buying at the best prices at lows. And that is accumulation. That is a form of accumulation. So, and the second thing you want to know is that as it's moving to the side, you have absorption. And if you analyze it a little bit more, this right here would get you thinking, because it has a characteristic of effort reward. But I don't want to get into all of this, over analyzing and over speculation. It's just not that clear, right? That's all it is. The other point I want to make is that as this is doing its thing, right, the other thing you want to note are what other markets are doing, what other correlated markets are doing. So that's really important. As this market is going down, the above market, the wave on the above market, where you see that 550 up, that's just the ES. So the question that I would have here is, why is this market making a low low while the other market never makes a low low? The ES doesn't make a low low. And it has a very strong wave, and it holds and tests and tests and tests and starts going sideways here. But this market makes a lower low. So that gets you thinking, okay, something is wrong, because they should both be moving up or down because they're very highly correlated, and et cetera, et cetera. So that's like an early warning indicator, and many times with markets, it tell you, take a look at the sector. If there isn't like 20 stocks, just take, or for futures, you take a look at 2 or 3 indexes and see what's going on. Sometimes you want to take a look at the ES, other times it's like the NQ versus the ES. Anyway, the point being is that it's holding. So this market over here, it goes into a spring position and gets bought and absorbed and then pops up. And this is the YM, the top wave chart is the whatever, is the ES. And then it continues to go higher. So sometimes, you do find that it is helpful. Alright, so coming back to the key points here, the key points, if you just take the market and judge it by its own action, is that over here you have absorption. So this is one very important characteristic that you want to be aware of. Absorption is absorbing supply. Demand is absorbing supply. Supply was there, went up, ding, 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 and then it goes up. It can also be viewed as cause. It creates a nice cause, and then you see its effect. Are there any other things that we take away from this? We also take away that the market rallied up here, made a higher high, and pulled back to test the breakout, as they typically do, going into a spring position. And then this thing right here, this happened. When it moves sideways like that, it creates like this building block. You may see this as reaccumulation or whatever, or testing, etc. And then it rallies. So it creates a stepping stone to go higher. You could also see it as, market attempts to go down, 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 down on 1, 2, 3, 4, 5, 6, and it can't go down. It fails to go down. and that sets up ability for bulls to push it up. It's not going down. Why it's being bought or supply is dry. All right. So we've gone over this. We've gone over where the volume came from, etc. The other thing we want to note is that there's another breakout. Where's that breakout? That is of interest to us is against this area right here. You clearly see the 42. That is a breakout. What do we want to do? You want to mark that area now, because chances are it's going to test it. All right, I'm done.